interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Hello, everybody, and welcome back to the Private Equity Podcast. Joining us today is Dr. Ola Brown, the founder of Flying Doctors Healthcare Investment Company, a healthcare investment firm focused on investing in healthcare services companies across Africa. Welcome, and thank you very much for sharing your story and insights with us today.
Thank you, Alex, and lovely to be speaking to you.
Absolutely. So as we always start, Ola, if you could give us a 60 to 90 second breakdown of you, please.
Hi, everybody. My name is Ola. I'm a medical physician. I'm an entrepreneur, and I'm also an investor who specializes in investing in healthcare and financial technology. It's great to be here. Great to meet you, Alex. And great to be sharing my story and hopefully learning from some of the feedback as well.
Perfect. So Ola, what's one mistake do you see either venture capital, private equity, or their portfolio companies making, and what actions would you take or suggest to correct them?
So I can only speak from the African perspective because I've only worked in investment in Africa. But I think the American economy is really huge in terms of the addressable market, in terms of people that have disposable income, and the same in the UK, the same in developed countries like Japan. So really, the role of a private equity firm or a venture capital firm is identify people with a great idea or a great company, give them money, and then more or less, leave them alone. Whereas what I've realized in the space in Africa is that it's useful to have an operator's background when you're investing. I think it's not compulsory, but it's useful to either have operators on your team or be an operator yourself as a general partner. And the reason why I say this is because of I call them evil forces, but the Harvard Business Review is a lot more tactful with their description. They say institutional voids that exist in emerging market environments. They can be regulatory, they can be to do with the market, they can be to do with customer acquisition. But an operator's background or an operator background, someone that has been an entrepreneur, someone that has operated a business, either as a GP or on the team, helps companies to bridge some of those institutional voids by giving more practical advice in terms of operating the business, in terms of relationships, both on the regulatory side and on the financing side, as well as assistance with business development and HR talent, etc. Because everything is a bit more fragmented in emerging markets. And I think that operator background, really well networked individuals operating this fund really make the difference for the portfolio companies.
Excellent. So I'm fascinated to know, so I did a bit of digging on you and found out that obviously you used to be actually in the UK as an NHS service doctor. So thank you very much for the work that you did, no doubt saving plenty of lives. And then you've gone into the investing world. So, tell us about how you've made that transition. I'm sure being a doctor and being an investor are completely different worlds. So how's that come about?
So I started off my career at the NHS, and I think like every doctor, I just wanted to be a consultant, and I wanted to work for the NHS forever. But getting into the job, I realized two things. Number one, the time that I had was only limited. The impact that I could make was really limited to the amount of patients I could see in a day. And no matter how hard you work, even if you're seeing patients 24 hours a day, you can only make a certain amount of impact in clinical practice. And that impact, I don't want to sort of diminish it in any way. It's amazing work. And doctors are, particularly in the NHS environment, it's the most sophisticated healthcare organization in the world in terms of delivering value for patients free at the point of receiving that treatment. It's an amazing organization. It's an organization that sets an example for the world in the way that healthcare should be run. But I felt like I wanted to sort of make more impact than I could do in clinical practice, in terms of, I can't see 1 million patients in a day. I can't see 1,000 patients in a day. But I wanted to try and maybe make more is the wrong term actually, but make a different kind of impact where I could build something that could perhaps make more impact than I could make on my own. And that wasn't something that was available to me in clinical practice. So I started thinking about what I could do. When I was in medical school, my younger sister actually died in Nigeria. And she died because of reasons that could easily sort of have been diagnosed and treated in the UK. And one of my initial thoughts when struggling with this transition was, it would have been such an easy, straightforward pathway to follow in the UK, but in Nigeria and in most parts of Africa, there are so many preventable deaths because of the lack of services and the lack of financing in our healthcare system. And I felt that sense of inequality and that lack of justice was kind of devastating for me. So I decided to start a business here in Nigeria, which I did. We started a medical transportation company and expanded that into a full service medical company. But even running that sort of highlighted to me this need for additional financing from the infrastructure side, from the private equity side, and from the technology side of healthcare in Africa. So that made me start thinking more about the power of investment and how catalytic investments made in the right way and channeled in the right direction can be to thousands and millions of people. And that was the kind of impact that I really wanted to make.
Wow, what a story, and what a cause to fight. And obviously, sorry to hear about your sister, especially if well, you're a doctor, so you'll know what could be treated and what can't. But amazing. And you also mentioned as well that you do your FinTech work. How does that kind of play in, and where did that kind of come in your investing kind of cycle?
So I wanted to work in investing, and I started speaking to some of my friends who were in the same situation. We had retained earnings from our companies. The investment options in Nigeria were pretty slim in terms of our stock market and in terms of the availability of alternative investments. And that there was this new technology boom that was beginning that we all sensed. So we got together to start a fund. So I co-founded my first fund around 2014, 15, with 3 other main partners who are also directors. And we decided to focus on financial technology, principally because the chairman of the board was a finance guy and one of Nigeria's actually most respected economists. So since he was leading it, we started focusing on FinTech as the beginning of our investment journey. And as that vehicle grew, one of the first companies we invested in was a company called Paystack, which eventually actually became one of the largest exits in sub-Saharan Africa. So we invested quite early on, before they got into Y Combinator. Actually, we made that investment, and they ended up being acquired by Stripe for $200 million. So that was one of the first investments that we made with Greentree, and since then we've focused on FinTech. But as we were growing Greentree and running it, I started to learn more about finance. I started academic study of finance, so I actually started a master's in finance and economics as well. And I started zooming in on what I really wanted to do, which was try and still bridge the healthcare gap, because I was bringing a lot of healthcare deals to Greentree, but obviously the vehicle wasn't structured to invest just in healthcare. So they did a few, but not as many as I would have liked to do personally. So I ended up setting up my own fund to invest in healthcare, but healthcare across the board. So healthcare in terms of the venture capital investments, in terms of the private equity side, and also in terms of the infrastructure as well. So that's what I do now. We do have a Catalyst Fund, which is a collective, which has members actually, which invest in both healthcare and fintech still, because I love finance, and I think that finance and financial architecture, payments infrastructure, etc., really does affect the uptake of healthcare, particularly in the technology space. But our main fund is focused on investing in healthcare exclusively.
Very impressive, very impressive. And what a first exit as well, to household name of Stripe, which big global, certainly a big global business now. Interesting. So on the healthcare side, unfortunately, we work with firms that focus on healthcare and also work with firms that focus on impact investing, and it does have that kind of perspective that it can be less lucrative, certainly, than what you would regard as, depending on how you define traditional investing. So how do you work to ensure, especially investing in Africa as well, how do you work to ensure that the companies that you invest in are successful?
So I think there's two streams to this answer in my head in terms of the way impact investing is viewed and the way that our strategy for making sure that we have profitable exits. So in terms of the way that impact investing is viewed as less lucrative, I just find it strange that people think that you can't do well and do good at the same time. I think that that's the best way to do well. Is to be able to make some sort of impact in the world. And I believe that capital should serve humanity, not the other way around. So I don't think that impact investing, as defined as in the strict sense of really making changes in people's lives, transformative infrastructure, transformative companies that really change the world and change people's lives, lift people out of poverty, create jobs. I don't think that that's mutual and sort of profit. I don't think that those two things are mutually exclusive. In fact, I think they go really well together, because business is about the creation of value, and the more value you create, potentially the more profitable you can become in a lot of circumstances. And then how do we create value? What's our specific methodology? I think that we're a lot more hands-on, both in the venture capital and in the private equity, and in fact in our infrastructure investments, than a traditional developed country private equity firm or VC would be. So we we have more touch points with our portfolio companies than I guess most companies in the developed world would have. We assist with HR, for instance. So we have a whole HR infrastructure which helps with recruiting talent. In Africa, it's the talent. You see the unemployment numbers. So you think that, there's high unemployment, that means that there should be lots of people to recruit. But actually the high employment is because a lot of people don't go to university. A lot of people are in informal jobs. A lot of people have never worked in a structured organization. A lot of even when they do go to university, some of the curriculums are outdated. So HR becomes a much more intense function in that there's a lot of training that needs to be done, a lot of careful recruiting that also needs to be done as well. So we specialize in that and support our portfolio companies with that. Also, I would say Africa is a lower trust environment. So people don't just do business with anybody. They work on referrals, they work on introductions. So we also have a business development function in-house where we help our companies to find new businesses, identify new opportunities, make introductions. We're continually making business development introductions for them to get new customers, make new sales. We're always brokering partnerships on behalf of our portfolio companies. And I think that that's something that helps us to be successful. And then there's also the financing side, where just because somebody has founded a great company doesn't mean that they're able to identify the sources of debt or equity or foreign funders or development finance institutions, or the right funding mix to get follow-on funding. So we also give financial advice. We offer debt services, for instance, for people that want to take on venture debt. We offer financing for equipment for people that want to buy equipment. And we try and give the right advice in terms of even the currency fluctuations are things that you don't have to worry about in a developed country, but in developing countries, currency risk is very real. So we look at the currency mix in terms of earnings and advise on that as well. We have a team of financial experts here that are able to do that. So I think your question was twofold. One, how the impact investing as an asset class is sort of viewed. And then the second was around how we support our portfolio companies to win. And I hope I've answered both of those.
Absolutely. I mean, it's interesting. Obviously, I see a lot of, we focus Europe, North America, so we see a lot of what you would regard as kind of the developing world, or developed world, sorry, and the challenges that those private equity firms face. And it seems you're facing very similar challenges, obviously, but slightly different. American firms face the same challenge. They can't find the right talent, but yours is more so that, maybe the education and the actual individuals don't exist quite as much due to your education system and everything else. But it's interesting to hear what you've set up for your portfolio companies to support them. And then we are seeing more and more private equity firms now actually building infrastructure within their own firm to actually support their portfolio companies. And it sounds like you're miles ahead from a lot of the firms that we speak with and what they're putting in place. It's kind of bringing in people to help the firms grow at this stage. But we are seeing more and more firms looking at stuff like their HR strategy is certainly one of them. But that's really interesting to hear how you guys are handling that. And that's clearly very impressive with regards to the infrastructure you've actually put around to ensure that these companies are successful. So I have to say I wasn't expecting that, and that's amazing. Truly is. So obviously this impact investing and investing for good, however you want to kind of coin the phrase. What results have you guys seen from the parts of your investments in that focus in the healthcare challenges within Africa? How have you guys kind of helped and developed that, not along the sides of returns, because you've clearly mentioned that already in the fintech side, but what actual improvements and things have you guys been able to make through the investments that you've done with your firm?
So on the VC side, I'm going to talk about some of our portfolio companies because I'm super proud of them. So on the VC side, for instance, we invested in a company called Life Stores. And Life Stores is a pharmaceutical distribution chain. And they, Africa, believe it or not, actually, consumers in Africa, patients in Africa actually pay more for drugs because of the broken value chains and the huge numbers of middlemen, particularly in rural areas. Then in terms of a proportion of income, then what would be paid in a developed countries. So there's a lot of opacity around the value chains for drugs in Africa, and there's also a lot of fake drugs. So what Life Stores do is they cut out those middlemen and charge lower prices to the customers by working directly with manufacturers. And they have grown exponentially since we invested. They're about to do their Series A. And we're very, very proud of the progress that they've made by reducing the cost of drugs for some of the poorest people in the world exponentially, and also increasing the transparency within the value chain, which is also very important. On the PE side, we were part of a syndicate that did a take private transaction. So there was a company listed, a drug manufacturing company listed on the Nigerian Stock Exchange, which we thought that we could turn around, and we have turned it around. It's now profitable. And what we did with that was we bought out the existing shareholders, took the company private, and were able to execute, along with the management and the other shareholders within the syndicate, a turnaround strategy. And this company has now sort of, in terms of revenues and profits, again, experienced exponential growth. So With those two examples, I think you can see how we've done a really good thing in the pharmaceutical value chain. Both of those companies are in the pharmaceutical value chain, but also we've been able to give out returns to investors and increase the value of those companies drastically from the point of investment to where we are now. And we've done that with a combination of some of the services that I've spoken about. So support with business development, making sure that we create this ecosystem where our portfolio companies can work with each other as well, because we know that that leads to better returns, as well as helping with talent and recruitment from personal networks and from also our HR experts that we have in-house. The last example is a company called Real Fruit. And this is a female-led company that does manufacturing of dried fruits. We invested in her company as a on the private equity side. It's healthy fruits. And she's just received a subsequent $3 million investment from one of the largest private equity firms in Africa. And she's actually looking to export to the American and UK markets. And that investment was to fuel the expansion. So again, we're seeing how we can create value early on, which leads to subsequent investments that can really be transformative, not just for people in Africa in terms of the employment, obviously, that this manufacturing company will create and from the value chain, but also hopefully delivering really healthy organic produce to American customers, British customers in developed markets across the world.
Perfect. I'm shocked to hear that drugs per income is more expensive. I think I'm a bit saddened to hear that, actually, to be fair, in Nigeria and across Africa, that's the case. But I suppose with that brings opportunity, and therefore obviously you're actually cutting the costs, but also creating one single channel for people to be able to get better access to healthcare and not pay as much, and obviously create a lucrative business around the back of it. So impressive. I think it's been a really good insight into impact investing. I've had different people on the podcast and who are focused on that, either sustainability or do good investing, and it's really great to hear of you guys pushing along that with what you're doing. So that's fantastic. So thank you very much for sharing it. So Ola, so thank you very much for sharing everything you've gone through here. It's been really insightful, and it's great to hear of stories of do good and how the industry is doing great for businesses, because private equity venture capital can get a bad write-up, sometimes correctly, but I think 90% of the time wrongly within the media. So it's good to hear of what you're doing and what you're doing to change things, and also that doesn't even cover the employment and everything else that comes underneath the opportunities you bring for people coming into businesses that are thriving and clearly doing very successful.
Thank you very much. It's been great speaking to you.
No, absolutely. If anybody wants to reach out, Ola, how best do they kind of reach out and get in contact with you? Although you're not the hardest person to find on the internet, there's lots of stuff on there, so it didn't take much research from my perspective. But how best do people get in touch?
Okay, so my Twitter, I'm always on Twitter, I'm always on LinkedIn. So that's pretty easy. And my email address is also on my LinkedIn. So I'm a pretty open book. It's easy to reach out to me. I answer LinkedIn the quickest, but also my email and my Twitter. My Twitter is @NigerFlyingDoctor. My LinkedIn is Ola Brown. So I'm pretty easy to find, and hopefully pretty easy to just send a direct message. I'll have a look at my profile and my emails on it anyway.
Perfect. Well, we'll put those details in the show notes. So, well, thank you very much again, Ola, for joining us. I really appreciate your insight into venture, private equity, emerging markets. We've discussed a lot of stuff here, impact investing, investing for good. So thank you very much. And I'm sure there's lots for people to take away here, and certainly for myself. But thank you very much for joining us.
Thank you. Thank you. It's been great speaking to you. Have a nice day.
Perfect. And as always, thank you very much for our listeners for joining us yet again. Should you ever need support with your private equity firm or your portfolio companies with hiring, please do reach out to me at Raw Selection. But if you haven't already, please do subscribe to the podcast and you'll be notified of the next one. We release them every 2 weeks. But thank you very much for your time. Until then, keep smashing it.
Thank you for listening to the Private Equity Podcast on www.raw-selection.com.